before we get started. I hope this isn't a dry topic. Get it focused. I'm aware of that wonderful saying of death by PowerPoint, so I'm hoping this won't be death by PowerPoint. All the people who criticise PowerPoint don't really come up with alternatives to making presentations. Before we start, can I just introduce a couple of my work colleagues? Anna, who's one of our partners at Anderson Vidray, who I'm trying to get to come more often to these things, and Nicole as well, who's one of our star employees. And Tony, you'll be very pleased to know Nicole's in charge of our social media in our office. So I'm a wonderful delegator of Gen Y. I've got to go back to what you were saying, Julie. You reminded me of a fantastic story. You know, the record keeping, getting rid of the stuff. Two guys walking on a beach, they bump into each other, haven't seen each other for years, and they say, "What are you doing here?" And the first guy says, "Well, you know, I had a factory in Sydney, and unfortunately it burnt down to the ground, and by the time we mucked around with the insurance money, we were too close to retirement, and the wife and I decided that it was just too hard to rebuild. We just took the insurance money, sold the land, and we decided to move up here to Queensland to retire. What's your story?" He said, "Well, as you know, we had a factory in Melbourne, and we had a flood, and it ruined everything. All our records were wrecked, and we did the same thing. We took the insurance money." And the first guy said, "How do you start a flood?" I always like that story. I could have sworn I saw Paul Hogan throwing his tax records into the Brisbane River for the recent Brisbane floods. Okay, honest answers, please, to this question. Who thinks at this point right now, without knowing very little about this paid parental leave scheme, who thinks it's not going to affect them very much at all? Not much? Not much? Be honest. I'm not going to pick on you or make a fool of you. Okay. It will. It will. The government slipped this in earlier this year, and we sat through a presentation, and I think that about 99% of people, employers out there, don't know what's about to hit them. All right, so a few disclaimers. Please be careful with advice on this. You'll see as you get towards the end of it, don't get caught up in giving specific advice in this area. You're going to, I think, there's a lot of variables, so this is just a general overview, and there's nothing that's quite substitutes for specific tailored advice. Okay, so what happened? The PPL, there's a lot of acronyms in this, in this presentation. PPL is the first one. It's a national government-funded paid parental leave scheme. It came in on the 1st of January. The whole idea of the Act is to provide financial support to these primary carers, to allow the carer time off work and whatnot. What it's really doing, the cynic in me says that it's cost-shifting by the governments, and you'll see why a little bit later on. But what it's really doing, it's trying to allow the primary carer to stay connected with their workplace, and that to me is the real reason for this. In the past, the Centrelink of the Family Assistance Office would pay the baby bonus, and really the mother would have left work, maybe for good, maybe on extended leave. This is a way to try and keep them connected with that workforce, so it's not a bad idea. So we're going to cover an overview. We'll have a look at who's eligible for it, how much can be paid, how is it funded, what's the process, the administration, what are the additional obligations on employers, and ultimately bookkeepers and accountants. This will affect you guys. If you're looking for more work, this is it. There will be more processing for you guys, as you will see very soon. Cost shifting. Can it be transferred? What are the consequences if employers don't comply? How does it interact with the NES? And how does it interact with existing paid parental leave schemes? Okay, let's have a look at what we have at the moment is that the paid parental leave entitlements are actually under the National Employment Standards. It's already under the Fair Work Act. I'm going to move that. I'm going to write on it in about 2 seconds. So each parent has an entitlement right now of up to 52 weeks unpaid leave in total. Why is that important? Anyone? Oh, by the way, I'll ask them. Hey? No, but why is it important? Unpaid entitlement of up to 52 weeks in total. Sorry? They can go back to their job. This wonderful little thing. Can I give away a prize? Catch. It's all to do with this wonderful little thing. Can I give you an example? We're just going to go off on a tangent here for a minute. This wonderful little thing called long service leave. Let's say you have a mother who worked for 8 years, has a baby, goes off for a year, and then comes back and works for another 3 years. She's got a dilemma right there. Does she leave, take her entitlements, or does she take the unpaid leave, come back, work for another 3 years, and preserve that entire period of time? Don't get caught up in advising people on what to do. You don't know. Do you know how long service leave works? You don't get it until 10 years, maybe? Over 10 years, you're absolutely entitled to it. Between 5 and 10 years, an employee is entitled to long service leave if they leave for medical reasons, and pregnancy is a medical reason. So if she leaves there, you get 13 weeks for every 15 years service. So that's the whatever. Could someone work that out for me? They get that many weeks long service leave. That's how they're entitled to it. If, however, under this National Employment Standard, they decide to take 52 weeks unpaid leave, they don't accrue any long service leave or annual leave during that time. But when they come back, that person will have had, in total, 12 years, but they'll get paid for 11 because they don't accrue it during that time there. Okay? It doesn't sever the service period. Because if you advise, yeah, look, take all your money now, and then they come back and then they leave, they're going to lose the accrual for that part. Because, guess what? This thing here starts all over again. You've had a severance of employment. Okay? So this is tied into long service leave. Okay? It's trying to keep mothers connected to the workforce. By the way, if I get anything wrong, can you tell me? These guys are very good. These guys are very, very good at correcting me. Okay, who's eligible? Okay, you guys aren't going to get really caught up in this, but this is more for completeness than anything else. Full-time, part-time employees who've completed 12 months continuous service. The government has set the bar very, very low. 12 months is not very long service at all. Here's a good one for you. Long-term casual employees who've been employed by the employer on a regular and systematic basis for a sequence of period of employment, blah, 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 reasonable expectation. Casuals. Casual works on a Monday every single week. They're going to be entitled to this as soon as they click over 12 months experience. It's also going to apply to contractors and the self-employed, but God love them, the Family Assistance Office, they're going to deal with those people direct. You'll ask yourself this question by the end of it, why don't they deal with this whole thing direct? And the last one there, the recipient of the paid parental leave must be the child's birth mother. There are exceptions, 99.9% it's going to be the birth mother. They're going to have to satisfy a few tests, a work test. They've got to work for 10 months and 13 weeks, no break greater than 8 weeks. There are some exemptions for complications and premature births. Minimum of 330 hours of paid work. That's an average of 1 day per week. Okay, so they've set the bar very low. And a working day is a day you've worked at least 1 hour. They've set the bar very low. This is to make the Labor government feel very warm and fuzzy about themselves. Okay, did you hear about the 150,000 income test? Looks like the definition of being rich these days is now set at 150,000. If you're on $149,000, you seem to get everything. The moment you're over that, you don't get family tax benefit, you don't get childcare benefit very soon, and you won't get this. The primary carer is, and this isn't the couple, just the primary carer, so the mother can receive this adjusted taxable income of $150,000. It's currently the family tax benefit test. What the adjusted taxable income means is they add back salary sacrifice, FBT, negative gearing on rental properties, negative gearing on investment portfolios, so they try and get you back up to your notional salary package before you start trying to reduce it artificially. It's just on the mother, on the carer. Got to be an Australian resident, living and working in Australia, and the recipient cannot return to work. Now, there are 18 keeping in touch days that are going to be allowed, so the moment you return to work, you will lose your PPL. Okay, and I'll talk about that in a second. I'll draw another diagram. Okay, the keeping in touch days are for, like, what they say, staff training, budget days, all those sort of wonderful things. And you've got to be paid for them. Okay, how much do they get? The mother will receive the equivalent of 18 weeks paid. Oh, there are notes on your desk too, by the way. Don't mention that. Good. Make whatever notes you need to. 18 weeks pay at the current minimum wage, which is roughly in round terms $570 per week, and it is $10,260. Now, the recipient can nominate when they want to receive it, as long as it's received in an 18-week continuous period within 12 months of the birth. Okay. Now, here's the difference to the baby bonus. It's going to be taxed, just like salary and wages. Here's where your job comes in. You're going to be receiving money, you're going to be paying it out in wages. However, there's no super guarantee charge on it. How many people are going to cost their... How many people do you think, or how many bookkeepers do you think are going to cost their employers money by not unclicking that little SGC box? You now know there's no payroll tax on it. There is no workers' comp on it. How many people are going to be filling in the workers' comp declaration by running off the payroll activity summary, and whatever that total is, you're going to cost people, employers, money. You can salary sacrifice. Why you just salary sacrifice is beyond me, but you can if you want to. Now, the only things that employers are allowed to withhold from PPL is if you've got a child support obligation, if there is a garnishee that's in place, that you haven't paid a parking fine or something like that, or anything that they authorise, like an NIB deduction or something like that. In most cases, it's going to be administered by the FAO, which is the Family Assistance Office within Centrelink. And if the mother picks the PPL, they can't get the baby bonus. So this is going to be their dilemma. They're going to pick one or the other. So the baby bonus is about, what is it, $5,000, $5,000 after tax, tax-free, 13 fortnights, or 18 times 570 pre-tax. You choose. It's sort of, it's threshold 75,000 for the 6-month period. So it's, yeah, after the baby's born, yeah. I haven't covered that here. All right. Okay, so any questions so far? All good? Okay, so what's the process? Here's where you guys are going to get involved in this. The first that an employer is going to know about this is when they get a letter from Centrelink, from the Family Assistance Office. So what happens is the employee makes a claim to FAO. FAO will make what's called a payability determination. They'll determine whether the mother is going to be entitled to this payment. Now, the FAO will make and give an employer a notice of employer determination. That's going to be the first bit of paper that the employer gets, shoves it on your big pile of papers and says to you, what the hell do I do with this? Within 14 days of receiving the notice, which means that by the time you turn up, the 14 days will probably be expired. You know, that won't happen. Of course not. Now, this is interesting. The employer must accept the notice or provide details or request a review. The employer may turn around and say, no, that person hasn't been working for me for 12 months. Okay, so they've actually got the right to reject it. Okay? Chances are they won't. As I've got a little bit later on, what's going to happen to the employer, because I'm going to be one of them, who doesn't want to give governments their bank details. I don't like giving governments bank details. We were talking earlier at this table here with Lloyd that the office have got this wonderful ability now to reach into your bank account and take your money if you owe them money on your integrated client account. They will garnish your money directly to the bank. The first you'll hear about it is when you get a letter from the tax office to say, by the way, we've just dipped into your account and taken, is it 70% or 30%? 70% of whatever the balance was at the time that they reached in. I don't like giving governments my bank details. All right, so how's it paid? So the mechanics of it will be that for your full-time, part-time and those casuals who apply, the Family Assistance Office will pay it to the employer will pay it to the employee. Okay? So there's an increase in the amount of processing you're going to do. In other cases, the FAO will pay it directly to the employee for your contractor or your self-employed. Okay? It's already in. We're in a transitional phase at the minute. It came in on the 1st of January 2011. After this session here, your employers may want to early adopt. You can, but from the 1st of July, it'll be compulsory. All right? Now, once the employer receives the money, they are to pay to that employee as part of the regular pay cycle. If you pay weekly, you pay the mother weekly. If you pay fortnightly, you pay the mother fortnightly. If there's no regular amount, you must pay at least monthly. That's one thing the employers can do. If you're on a fortnightly cycle of pays and you'd like to be paid weekly, the employer can say, no, we don't want the extra administration burden, we'll just do it as part of the normal payroll cycle. And there's no obligation on the employer to pay it unless the FAO has actually issued one of those employer determinations and they've actually paid the funding. You've got to receive the funding. Okay? So employers will not be out of pocket. And there's a quirky little thing about that as well. What are the additional obligations? The employer must, before the next working day, after paying a PPL, give the employee a record of the payment. It's usually a payment slip. Do you guys email pay slips?
Yeah.
Maybe? Yep. I'd suggest that if there's a stay-home mother, then probably that's going to be the best way to get it to them. And you've got to keep records for 7 years, and This is an interesting one. The employer can actually request up to 6 weeks worth of your PPL in advance from Family Assistance Office. So if you're on a weekly pay cycle, ask for 6 weeks in advance. It sits in your bank account, and over the next 6 weeks you pay the employer. These are a few additional obligations. The employer must notify FA if certain things happen, if the bank account changes, if the pay period changes, if the employee ceases, if the employer ceases. I'd like that phone call. I'm going broke and I'm just going out of business, just to let you know. If the employee returns to work before the PPL is paid, let's just draw the diagram on that. You've got a 12-month period. Well, the mother's got to pick within 12 months an 18-week slab of time to receive the PPL. Usually they'll do it here. But they've got to be careful, because the closer they get to the end of the 12 months, they'll actually run out. If she decides to go back to work here, the PPL stops immediately. All right? It's too bad that she's waited here. The moment the employee goes back to work and starts getting paid again, the PPL will stop. Okay? So as you can see, employers aren't out of pocket at the moment, apart from your extra costs. Now, what can also happen, unbeknownst to you guys, is that the PPL can actually be transferred to the partner, so from the mother to the father, for example. And as soon as that happens, the partner then has to meet the eligibility criteria. We've got to go through that whole routine again. Do they meet the work test? Do they meet that income test? Do they meet the residency test? So in other words, the mother has to qualify first, and once she's qualified, then the father must also qualify. And the transfer must be continuous. It can't be a break in work. If the mother returns to work and they want to transfer it, the father must go on that PPL straight away. So in this case here, she goes back to work, the father must be on this PPL straight away. But what usually will happen is that that's where the employer's obligation will end, unless the employer also employs the father. All right? What are the consequences? What about the employers like me who don't want to play? So what will happen? I'll probably get a phone call from the Fair Work Ombudsman or the Department Secretary. They will start issuing compliance notice, infringement notices. They may apply to the Federal Court for civil penalty orders, which will probably be against the individual, I think. Can you get civil penalty orders lodged against companies, employees? Do they? You can you? Okay. I thought it was against an individual. And of course the employee can sue the employer for failing to make a payment, especially if they receive 6 weeks in advance and then don't pay them. So in a way it's going to keep the mother connected with work, but I think there's going to be a lot of administrative nightmares. Where's my money? I don't know whether I've received it yet. Waiting for FAO to pay us. FAO tell me if they've paid you. I don't know, guys. It's going to be wonderful. Lots of extra admin. Okay, so I don't think I'll spend too much time on this. It's supposed to complement what's already under the National Employment Standards. There are a lot of employers, like typically councils, who already offer a maternity payment system. It's supposed to complement them. So if this system is better, then they're supposed to top it up. If they pay, for example, 10 weeks, then they're supposed to top it up to the 18 weeks. I don't know. I don't do any tax work for the councils at all, but I think it's a top-up arrangement. I'm not 100% across that. What, they get both?
Yeah.
Do they really?
Yeah.
Okay.
And the only way that the employer
I thought it said...
that was
okay. Because I thought I read through that it's supposed to complement it. No. Well, yeah, it says on that slide there, PPL can be accessed concurrently with employer-provided benefits. I thought, oh, well, maybe that means both. It could mean both. Yeah, it could mean both. And what they're going to do is they'll let the system run amok for about 2 years, and the government is going to call a review and just have a look at how much time off the primary carers are going to have and see if it interacts well, and have a look at the payment test and all that sort of stuff. Any other questions? The cynic in me tells me that at the moment what's going to happen is that, you know, all we're going to do is just sit around and wait, and in 5 years' time they'll pass another little piece of legislation which no one will hear about, saying, oh, by the way, the payments are now subject to super. Because someone's going to come up and say that women are terribly under-superannuated in Australia. And they are. So they'll turn around and remove the exemption. And then as soon as that happens, the payroll tax office will turn around and say, oh, it's too much administration to exclude that, we'll just include it for payroll tax purposes, and then workers' comp will fall in line. And then, of course, the government will freeze the payment at $570, and then the minimum wage will increase. I've seen it happen too often. Getting very sick of it. It stops. Yeah, and I think she fills in the form and then goes to them and gets, say, that's 12 weeks and that's 6. I think the new one will get the 6, I think. I'm not. You won't meet the 12-week test, yeah, that's it. I think, yeah, you might blow it. 12 months, yeah. No, but the moment she leaves, the FAO will stop paying him. The FAO will stop paying the employer. And gone and worked somewhere else. Dob them in. Bloody Centrelink cheats. There's all sorts of other quirky stuff. This is what we're up to. Exactly. Look, those sort of ins and outs are going to be. So, right about now, this is what when we were sitting through the presentation. Why didn't the FAO just handle it direct? They're doing it for the contractors' employees. They're doing it so that Labor can show themselves out to the world that we have a paid parental leave scheme to make themselves feel warm and fuzzy. But it's keeping, as I said, it's keeping women connected to the workforce. These PPL payments will not impact on any annual leave or long service leave. How many bookkeepers are going to have that little accrual ticking away during that time that it's being paid? They don't accrue any leave during the time that they're off. So make sure if you're doing this that you don't accrue any annual leave or long service leave. Okay? Now, here's the interesting one I said a little bit before. The carer has got the option of choosing between the tax-free baby bonus or the PPL. And the FAO actually have a calculator, comparison calculator, to assist them. So be very careful what you say to someone, whichever way they want to jump. If you've got someone in a high tax bracket, we're trying to do the numbers on this, they're going to lose about 39 cents in the dollar. If you've got someone on, what was the figure? Anyway, less than the 150. They could lose potentially about 30 cents in the dollar on it, so it gets them back to about 7. It's still going to be a little bit better than the baby bonus. Obviously, they're going to choose the baby bonus if they're less than 12 months. Okay. Now, when you receive it, how are you going to code it? You're doing all the codings. What are you going to put it to? And now, wages? No. You got to code it to whatever. Probably the 9 series or the 4 series.
You've got here report on first. You mean the income
yes.
from the FAO?
You've received 500. There's 2 transactions. You've received the 570. You've paid the 570. The paying 570 is through payroll. No super, no workers' comp, no payroll tax. Right? No accrual of leave. Now go the other way. You've received the 570. What do you code it to? You're going to code it to something in the 9 series. Other income, PPL received, whatever you want to call it. GST. No GST? Do you know? Do you have GST? What I have read is that it will not have GST on it. Okay? It'll just be the pure 570. So depending on how you code that stuff, we code it to NT or GNR. Well, not GNR. It'll be some sort of... What I've said on here is code it to the same thing that you code interest received to. It's exactly the same as what interest received is. Okay? Because you're receiving it, whether you call it free or whatever, because you still have to report it in your BAS at G1. Okay? Yes. With no GST on it. How many people do that? How many people do that? Show interest received in G1. Yeah, but do you include it in G1? Yeah. So this will be another thing. If you want to code it as PPL, but it goes into G1. Okay. Yeah. Probably based on what they earn over here. 30%, 15%. That's right. And what if the financial year is just about here? Right? And what if... all sorts of logical questions. This is... Yeah. Other quirky stuff. Because in all seriousness, if you've got someone like a career woman who's earned a lot of money up until that point and then will not work, then... And she knows in that next year that she won't work, right, at all, that 10,000 is going to get taxed should be taxed at only 15%. But if you go and tax it based on what she's earned back here, you're going to try and do it 46.5, whatever it is. Okay. What's the questions you got to ask? It's that wonderful relationship that you have with all your accountants. You just make a phone call. What would you like me to tax the person at?
Same way you would treat the same as like the interest received, it would be the
Yep.
same thinking about instalment income, or would then have to include it also as instalment income?
That's what I've asked the question and I haven't fully answered it yet, but we think that yes, it will be included in T1 as well, for the purpose of those who are calculating their instalments. Well, it's income, even though it's a reimbursement. We think it is. We think it is. It's not going to be a lot of money. It's not going to be a lot of money.
Unless you've got a lot of women. Department of Education will have a night now. I know at one school.
You laugh.
There's 5 gone off in the last year.
You laugh. We look after a very large travel agency, and the travel agency would be probably 99% women. This is going to cause all sorts of extra payroll
Just ask them when they're
activities.
employed, how old are you?
That's the most sexist comment I have seen. Do we record that, please? And I just want to put on the record that it was a female who said that, not a male. And I want to share it with you. When I showed Tracy these notes, my wife at home, the first thing she said was, "Oh my God, young women are not going to get employed." That's the first thing she said. So I didn't say that. I'm not saying it because I'm allowed to. Can I go off on a tangent? This is one of the reasons why, in all cynical comments stripped away, this is why they're trying to keep women connected with the workforce. There are some unbelievably harsh cases of unfair dismissal that we've read, where women have come back to work and been treated like lepers. There was a fantastic case of a female partner in PricewaterhouseCoopers. It made the Fin Review, and she, a bit like the Australian Defence Force, has come out with all these sort of bullying allegations and boys' clubs and all that sort of stuff. She virtually came back to work and said, "Okay, I'm back to work," and she had a desk in the corner with no files. They just wouldn't give her any work. Same with was a solicitor, same sort of thing that happened. Came back to work and went, "Oh, we've taken all the clients away from you, just sit in the corner," expecting them to resign. Terrible stuff. So it's trying to keep people connected. We're not going to get involved in all those sort of things. What about multiple births?
Oh, painful.
Hey? Very painful. The father's filling in the forms while she's pushing. You can only get the PPL for one birth. So what will happen is they'll choose the PPL for one child, and then they'll have to go for the baby bonus for the other, or others. Okay, little quirky things. You can get PPL for stillborn births, but not for miscarriages. And not that I know how many weeks. Did they say how many weeks? I couldn't remember. I didn't think she knew. Could have been, yeah, some magical figure in the 20s. As Anna mentioned a little bit beforehand, there's no pro rata of the weekly amount to be paid under the PPL. So a casual working that 1 day a week will get the full $570.
Oh, now that's a good work.
No pro rata. Isn't that wonderful? I'm not saying anything. We're going to pay for all of this. We're going to pay for all this. We've got to pay for all this. And also, consider a casual who works for more than one employer. Casual works on a Monday for employer A and on a Friday for employer B. What are they going to do? Pick the most trustworthy employer that will administer it and pass it through? No, you'll have to pick one or the other. Pick one or the other. And consider me the employer who refuses to provide bank details. So what I think we're suggesting to our clients, because I haven't really conferred with anyone because I've been a bit been off, is I think we're going to say just set up a new payroll category called PPL. Make sure that the no super guarantee box is ticked. Tax it at the marginal rate, whatever that happens to be. Be a bit common sense about that, and then make sure it flows into the gross wages for the payment summary. So all of this is so that the employer produces that payment summary. Otherwise, FAO could have done it. It is blatant cost shifting by governments, without a shadow of a doubt. Graphically, why they just didn't pay it direct? Don't ask me. Who's it going to affect now? I seriously don't believe that, pick a figure, 99% of employers simply don't know what's going to hit them in the next few months. They're going to start getting these, maybe the large ones do, but certainly your SMEs, they just simply will not know. You guys are going to be on the front line. They're going to ask you, what do I do with this? Use the notes, make the phone calls, so that you're informed. Don't get caught up with the advisory side of it. Don't tell someone that they should pick the baby bonus versus limit. You just direct them to the website. Let them choose. And once they make the choice, then it's up to you to handle the paperwork. So, for those of you who are looking for more work, you'll get it, depending on how many extra of these wonderful transactions of 570 flushing in the left hand and out the right hand. Any other questions? Comments? I'm going to recommend that our clients set up a separate bank account. I don't like. We handle a lot of our clients' money goes through our trust account. I'm not a huge fan of refunds going through that they know your bank details, because when the reverse occurs, as I just said, they will just sweep that money out. Once that payment's been sitting there, it hasn't been paid by due dates. I'm hearing stories of the debt collection agencies chasing money within 10 days of the amount being due, right? So they're very, very aggressive at the moment. The country's got no money. That's basically it. And so they've really tightened up their cash collections. And to be fair, there's some ridiculous amount of money. I think it was about $8 billion outstanding in integrated client accounts that people aren't paying. And there are a lot of rogue operators who are stepping away and letting the company be liquidated, and within that 14-day period, or whatever, now it's 21 days, whatever it is, stepping away and stepping away from the from the liability. So that there's quite a lot of cash collection problems that the government's having. The cynic in me, no. I would open up a separate bank account, let it flush through. Is that it? Hope you're informed. Hope that makes sense. Very good.